Everyone, this is CA Rekha. So in today's session, we'll be discussing the topic of bank audit. So we'll see what is a bank audit, what are the different types of bank, what are the services that is performed by the banks, what are the features of banking, who is the regulator when it comes to banks, then what are the different types of reports that has to be given by the auditor. With regards to the appointment of an auditor, we will see what are the powers, the nature of appointment, the remuneration given to the auditor, what are the duties of the auditor with respect to your RBI Act, Companies Act, and also the general reporting. So we'll first move on to what is a bank audit. So first we'll see what is a banking. So as an introduction, this is a very common statement. So take any business or any kind of organization for that example, finance will be the backbone. So when you are taking the economy as a whole, banking is a backbone of any economy. So basically for the social economic growth as well as the stability, this is one main sector which is supporting or which serves as a backbone to any for any growth or development of any economy. Now, for a sound or for a very effective banking sector, so one of the most important factor, or I would say the prominent factor, would be the financial information. So whatever information that is being produced by the banks, so it should be supported by bank audits. So unless and until there is a bank audit, or unless and until there is a review conducted with respect to these financial information, the general public will not have assurance, or they will not be in a position to have faith in the financial information that is being shown by the banks. So what happens is, every time whenever there is a bank or whenever there is a banking operation taking place, the information whichever is being produced, financial information that is being produced by the bank, it should be supported by bank audits. So we know, like, we have branch audits, we have the central statutory audit for the branch. So different types of branch bank audits are there. Now, main function, if you ask me, for any bank, basically it is linked to main functions. There are various other functions. The main functions would be accepting the deposits. So accepting the deposits from the public as well as granting them advances or loans. So granting of loans or acceptance of deposits, both these are the main functions with respect to a bank. But the functions of a bank or the services provided by the bank is not just limited to these two. So these are the fundamental operations that is being carried out. One is accepting the deposits and granting the loans or advances. So if you ask me, there are n number of other functions or other services. Say for example, your collection, your remittances, your ECS, electronic clearing services, credit card, debit cards. There are a lot of other, your letter of credits, guarantee, so many other services provided by the bank. But broadly, I can tell two main services as acceptance of deposits and even granting advances. So even apart from the services, regular services that is being provided by the bank also provides certain complementary or other services which is not actually a part of their regular operations. But say for example, your insurance, underwriting and insurance, and even they have the high net worth individuals. What are the different services that is provided by bank to these high net worth individuals? You have risk management. So these are other services again provided by the banks in addition to the regular services. So we'll see based on the classification what are the different types of a bank. So for an introduction, it is one of the vital, or it can be said as a backbone of any economy. It is required for the social economic growth and maintaining the stability. And since it is considered as a backbone of any entity, for assurance, for getting the public assurance and also for getting the public faith in the financial information produced by the banks, it need to be audited. So it need to be audited, both concurrent as well as statutory audit. There should be audits, quality audits that should be taking place. So the main functions or the main services that provided the bank, I can basically classify as to accepting the deposits and granting the loans or advances. So apart from the various other services, whatever I mentioned few minutes back, these are the main functions. Now, based on this, first thing is understand. So whenever you are studying this chapter of bank audit, the main concept, or it is a little bit lengthy chapter, but the main point is understand the function or understand what are the operations that is being taken or taking place inside a bank. So then the concept or then the audit point of view becomes much easier. So understand the business, understand the operations or understand the services provided by the bank, then analyze from the audit perspective. Now, types of bank. So basically we can divide the banks into different types. One is your commercial banks. So commercial banks, if you see, there are both private banks as well as public sector banks. Now, private banks itself, you have like scheduled as well as unscheduled bank. So under commercial banks, broadly, they provide various services, not just sticking to those two. It provides a various arena of services, and broadly I can divide the commercial banks into two, your private sector and public sector banks. Under your private sector banks, you have the scheduled banks, unscheduled banks, and also you have the foreign banks. So scheduled banks and scheduled banks, in scheduled banks are those which obey or which are actually incorporated as per the rules of RBI. So they work as per the RBI rules, whereas your unscheduled banks are not sticking to the rules of RBI. So there are two basic classifications, scheduled and unscheduled. Then we have the foreign banks. Foreign banks are the ones that is incorporated outside India. So basic classification with respect to private banks are like scheduled, unscheduled and foreign banks. Then you have your public banks, public sector banks. You have SBI, you have other nationalized banks. So all these falls under your public sector banks, SBI, other scheduled banks. And now coming to the next one, that is the regional rural banks. So this kind of banks, these are mainly meant for the agricultural sector, regional rural banks. Then coming to the next one, it is cooperative bank. So cooperative bank, we all know the principle of a cooperative society. So they are mainly meant for the benefit of the members of the particular bank. So mainly meant for the members' benefit, whereas your regional rural banks are mainly meant for your agricultural sector. Now coming to payment banks. This is another type of bank where they accept the deposits up to 1 lakh, but they are not giving any loans. So such kind of banks come under your payment banks. Giving deposits, taking deposits up to 1 lakh, but they are not involved in giving advances or loans. The next is developmental banks. So they are mostly associated with industries. So they're also known as your term lending institutions, development banks. So they are mostly related with industries. And then the last classification is small finance bank. So small finance bank is mainly taking the deposits, and they provide small amount of loans to different sectors, especially to business units or industries and all. So depending on what activity is being carried out by the bank or how it is incorporated, we saw what are the different types. Commercial banks, again, they are involved in providing various types of services. You have your public sector as well as your private sector banks. Your private sector banks, again, you have scheduled, unscheduled and foreign banks. Scheduled and unscheduled, depending on how they are pertain to the rules of RBI. And again, we have foreign banks, banks that are incorporated outside India. Then on the other hand, your private sector banks, it includes your SBI and other nationalized banks. Then we came to regional rural banks. So these banks are nothing but these are banks that are associated with the agricultural sector. Then we had cooperative banks, banks functioning for the benefit of its members. Payment banks, banks which accept deposits up to 1 lakh but does not give loans or advances. Development banks are banks which are giving loans or banks which are involved with the industries. They are also called as term lending institutions. And small finance bank, they also take deposits and give small loans to your business units or industries. So basically these are the type of banks. So when we are discussing about your auditor's appointment, remuneration, maybe we might touch upon the different categories like how the auditor is appointed or what is the remuneration for an auditor with respect to a banking company, with respect to a nationalized bank or SBI. So there this classification might help. So that's why I have given the different types of bank in the beginning. Now, in a particular bank, the data, it could be either completely manual, it could be either fully computerized, or it could be both. In between, it could be few things could be manual, few could be computerized. So again, depending on the type of How the operations are carried out, again we have another classification. Now, telling about banks, we know companies, the companies are regulated or companies are formed under your Companies Act. Now, banks, the regulator for all the banks would be your RBI. So, telling about RBI, all the functions of the bank, it is regulated by the Reserve Bank of India. So, this is an apex body. Everything, all the banking operations are regulated by Reserve Bank of India. So, the first thing is whenever a bank has to commence its operation, say it is starting a banking business, what happens is it has to obtain the license from RBI. So without obtaining a license from RBI, a banking cannot commence its banking operation, business of banking. So this is the how much weightage that is being given to RBI. They are the regulators, they are the apex body. Now, what are the functions of RBI? So I told you all the functions are regulated by RBI. So this is the apex body. So what it is also called as a Central Bank of India. It is kind of controlling all the other banks. Now, what are the functions of RBI? So it mainly, first function is issuance of currency. So currency issuance is the first function of RBI. Then regulation of the currency issue. So how much is the currency to be issued? Regulation of the currency issue and issuance of currency. Again, it is also acting as a banker, not only just to your state and central governments, but also to other commercial type of banks and other term lending institutions. So first is with respect to issuance of currency, regulation of the same. Second is it also acts as a banker to your state and central governments and also to other type of banks and commercial banks and also your term lending institution. It is also acting as a banker. So third point is acting as a banker to state and central governments. Again, acting it as a banker to your commercial and other banks. Now, regulating the activities, whatever activities that is being taking place in the commercial banks or other banks, it regulates that. And also they have the power to inspect the bank at any point of time. So basically, all the functions that is vested with the RBI is that of a regulatory body. It is mainly into controlling with respect to regulation, with respect to currency issue, acting as a banker, regulating the activities and also with respect to inspecting. So this is one small topic with respect to the regulation. Who governs or who regulates the banking activity, which is the apex body? What are the powers that is given to RBI with respect to the regulatory authorities conferred to it? And what are the areas where it operates with respect to, like say for example, I told you currency issuance, your regulation of currency, acting as a banker, inspections of bank, all these are different functions of RBI. Now, with respect to, so we saw what is a bank, what is the need for the audit of a bank statement. Now, how it is serving as a backbone to the economy. We saw the different types of banks depending on what area, what sector it caters to, and how it is how it is incorporated. And also we saw what is a regulatory body. Now coming to a bank specific details in the sense with respect to banking operations. So within the bank itself, there will be head offices, there will be your administrative offices, there will be branches. So when taking the banking operation, most of the banking operation is conducted only at the branches. So where one-to-one interaction between the customer as well as a bank employees are there. So there you have the daily operation takes place at the banks. Now, but we have head offices or other administrative offices. So what happens here is they are actually acting as your regulatory or controlling authorities with respect to that bank. That means they lay down the policies and procedures which they have to adhere to, and also the internal control framework procedures. What is the internal control procedures? Your authorizations, your supervisions, all those things takes place at the administrative offices. Now, branches are confined only to the operations, day-to-day operations, one-to-one interaction with the customer, all the processings, disbursement loan, but procedures, how they should work or what are the different types of internal control procedures, their delegation of authorities, supervision, monitoring, all these things happens in the administrative offices or the head offices. Now here one of the basic functions are delegation of powers. So what are the, how much can each person approve? Say with respect to your bank manager or your branch manager, chief manager, how much, what is the limit up to which they can approve or they can go for a loan disbursement. So they have the power delegation, they are fixing the responsibilities as well as the accountability and supervision, how each of the employees are performing, monitoring and also other control operations. So all these other activities related to your admin activities, internal control policy procedures takes place at the head office or administrative offices, whereas your banking operations takes place at the branches. Now, next is with respect to features. So this is one important aspect. So what are the main features of a banking business or a bank? So main features is, first thing is the transactions. So the huge volume of transactions, not only just transactions, they also deal with huge value of monetary items, negotiable instruments. So when you tell about the transactions, there are two parts. One is huge volume of transactions. These transactions are also complex transaction. Then huge volumes of monetary items, your negotiable instruments. So even they deal with that. That is one of the features of your banks. Then a network. It is not just one bank. All the operations are taken by through one particular bank. It is a network. There is a network. There are different branches which are connected together. Now because of the core banking system, everything is real time. Any one withdrawal or deposit in one particular branch, it will be immediately notified. You can get the notification even in your mobiles, like what is the remaining balance in your account. You have the mini statement. So there is a real-time updation because of the core banking. Now the second feature is about the geographical spread of the bank's network. So it is not restricted to one particular state or one particular city. It is geographically spread. Now, with respect to the products, it's not just, I told you, it is not just though your deposits and the advances, accepting deposits and your granting of advances, it is a basic bifurcation, but there are n number of other services that is being provided by the bank. Say for example, your credit cards, debit cards, mobile banking, phone banking, internet banking, ECS, you have your letter of credits, guarantees, underwriting, insurance. So the vast amount of services are being provided by these banks. So it is not just one or two. So large range of products and services offered. That is the third feature, extensive use of technology. So previously we didn't have a core banking system. Now almost all the banks are computerized. They have a core banking system, so which they can either obtain from some vendor like your Finacle or FlexCube or maybe Bankmate. All these are different different core banking software provided by vendors, or they can do a in-house customization, build their own particular core banking software as per the specifications and need for the respective bank. So technology is extensively used. So on time, real time updation is there, databases are getting updated, automatic posting happens. So all these are mainly, even your customer relationship management, everything is taken care by using of the CBS or core banking system. So extensive use of technology is also here. Now, strict vigilance by a regulator. As I told you, a regulator is none other than the RBI. So RBI is the apex body, central bank. So this is a one person who regulates the functioning of all the other banks. So features include your huge volume of transactions, complexity of these transactions, then geographical spread of these banks, how the banks are spread across the different places through branches, operations takes place through branches, then a huge or large range of products and services which they offer, then extensive use of technology, I told you with respect to CBS, then strict vigilance by the regulator, that is the RBI. So basically these are your features of banks. And now so basically we covered, I think we have finished with the main introduction part, like what is banking, types of bank, the regulator, operations and the features. Now going to the little bit into the audit perspective. So first we'll see basically what are the different types of reports that need to be furnished. So what are the different types of reports that needs to be furnished? So basically there are three types of reports. So whenever in a bank audit, broadly there are three types of reports, but there are other reports too. For the basic classification, I'm telling three types. But there are n number of other reports with respect to your SLR ratio, your Jilani committee recommendation. There are n number of other reports, but basically there are three types of reports. One is your statutory audit report. We all have actually seen in the previous sessions with respect to SA 700, 705 and 706. That is one thing. Second is long form audit report. So I'll tell you what is a long form audit report. Third is, and this is a requirement of the as per the RBI circular. So this statutory audit report is as per a company's as per the SA. We saw that how the audit report has to be given. SA 700 normal audit unmodified opinion, 705 modified opinion, 706 your emphasis and other matter paragraph. So this is a normal audit report that has to be given, statutory one. The next is a long form audit report. So this is as per your RBI circular. And last is your tax audit report, though as per the Income Tax Act. So there are basically three types of audit report, basic reports. In addition to this, so whenever you're conducting an audit, in addition to that, there are various other small reports which you give. So apart from this, we have other reports mainly to give or check the adequacy of the internal control. So basically, this internal control is one prime factor wherever in your regular audit or even in your bank audit, apart from the statutory report, there could be a report given on internal audit. So in bank, there is another report given on the effectiveness of internal control. So we have internal controls over financial reporting. So we already have seen in the internal control chapter, internal financial control. What is the requirement for internal financial control? What is the objective? How the auditor has to report with respect to that. So similarly, in banks also, auditor has to comment on the adequacy and the effectiveness of these internal controls. So a report should be there for that. Then with the SLR requirements, compliance with the SLR requirements, a report on that. Then with respect to the treasury operations. So whether the treasury operations are in line with the instructions given by RBI. So that is a third one. And next is with respect to income recognition. So how the income is recognized, how the assets are classified as per performing and non-performing asset. What is the provisioning, how the provisioning has been made for different, for agricultural advances, for others. So how the provision has been made, and is it as per the guidelines or the circulars given by RBI from time to time. So say for example, they have given some kind of a moratorium or loan moratorium now that has been declared. Now, is there any changes in the provisioning or asset classification during that time? So all these will be taken into aspect and a report will be given based on that. So this is the fourth one. Apart from the basic three types of reports that we give, then we have a report with regard to your compliance with respect to your GOSH committee implementations and also with respect to frauds and malpractices. So as per your GOSH committee as well as your Jilani committee recommendations, so the GOSH committee recommendations will be relating to fraud and malpractice, whereas your Jilani committee recommendations is mainly with respect to internal control, credit system, and also report on that also has to be given. And then any deviation or any kind of irregularity from the working of a bank, regular operations of a bank or regular working of a bank, which needs attention, immediate attention, whether it is not following the regular basic business principles, how operations are carried out. So a report on that should also be there. And also any particular instance observed with respect to your credit deposit ratio, adverse credit deposit ratios, for that also you have to give a report. So these are all the different types of report. So basically there are three types: your statutory report, your long form audit report and the tax audit report, basic classification. Apart from this, you give a report with respect to internal control effectiveness, SLR requirements, treasury operations compliance with the guidelines, income recognition, your asset classification and provisioning, your how it is complied with the Jilani committee and GOSH committee recommendations with respect to your internal control and malpractices relating to fraud. Then you have any kind of, if you notice any kind of irregularity with the working of a bank for that, and also the instance of adverse credit deposit ratio. So all these are the other reports apart from the basic three reports that we give. Now, after we have seen what are the basic types of report, we'll go to what is a bank audit approach. So we saw bank, what are the banking services, what are the different types of bank, who is the regulator. Now, what are the key features or what are the different features with respect to bank, like large volume of transaction, a large range of products and services. Then we saw types of audit report. So what are the different types of audit report? Then we saw bank audit. Then we are going to see the bank audit approach. So first thing is with respect to your bank audit, bank first thing is they should have appropriate controls. So take any institution for that instance, not only banks, any organization, the first approach would be to mitigate the risk. So I told you, risk can never be mitigated. It can never be reduced or eliminated. It can never be eliminated. It can only be reduced, because there is always a presence or always a concept of inherent risk. So even though you are trying to negate the risk, it will not be possible. There will be some risk that will be there, residual risk. So the company or the organization should be able to accept that risk. It should be within the risk appetite of that particular entity. So here banks also have to implement certain controls to mitigate its risk. That is the first thing. Then segregation of duties. We already saw in the internal control chapter with respect to how segregation of duties are brought into picture and how it is serving as a mechanism to bring about control. So that also we saw. Then accurate measurement, your reporting, verification, how the reporting process is done, how the verifications are carried out, your KYC documents, who approves the transaction, is there proper delegation of authorities, is it within the limit of each and every person to approve the transactions, reconciliation, setting up limit, your reporting, all this comes as a part of your bank audit approach. Then with respect to any kind of errors that is being raised or any kind of exceptions, who approves these exceptions, what is the means of tracking these exceptions or errors within the system. Then comes your physical security of the assets, custody of your gold or whatever that has been pledged, contingency planning in case of emergency, how the bank is able to continue its operations. What happens, say for example in this time of COVID itself, how the banking operations are carried out, especially with respect to the loan moratorium that has been declared. So what kind of loans could be given to the public even at the time when they have financial crunches, how they are continuing their operation. So this is a basic bank audit approach. Now, since I told you the basic bank audit approach, now next step would be like how, what are the different aspects in bank audit, like say for example planning of the audit. It will start with your engagement team discussions, then going about how to do the bank audit. Then you have the different policies, your asset classifications, how the provisioning is done, your different norms that is adopted by the bank. So we'll see each and everything. Now coming to the first part, your engagement team discussions. So this so your engagement team discussions, as I told you, any person who is allotted an audit of a particular entity, he will be called as an engagement partner. So under an engagement partner, there will be a team that will be working for that particular audit. It will consist of your chartered accountants, your article assistants, your audit assistants. Also a group of people will be there who will be working for that particular engagement. Now, why is there a need for these engagement team discussions? So this actually takes place in the planning phase of the audit. When they are planning the audit, giving the audit plan, your engagement team discussions takes place. So what is the relevance of this engagement team discussion? So as I told you, the first and the foremost requirement is to get an understanding of the bank and its environment. So in essay 315, we saw assessing an entity by understanding the entity and its environment. So by understanding the entity and its environment is one basic aspect in order to give a report or opinion about the financials. So first is understanding, gaining an understanding about the bank. So the first one, what is the main reason for this engagement team discussion would be to get a better understanding about the bank, its environment. Second, basic thing is internal control. I told you any organization for that instance, this is the most prime aspect, I would say, internal control. How effective the internal control your audit or the way or the amount or audit procedures you apply can be reduced. So more effective the internal control, less audit procedures you apply, less is the auditing done. So what happens here? Second aspect is again internal control. Third is risk assessment. So risk assessment with respect to your material misstatements. So this again, what is the potential for the material misstatement? Either due to fraud or maybe due to error. So what is the risk assessment? So that comes as your risk assessment is the third part. And once you assess the risk, okay, this much is the risk. Now what are the responses to that with respect to fraud, or say the risk could be with respect to fraud or even during the processing, day-to-day operations, engagement risk, pervasive risk. So what are the different responses to different types of risk? So these is the next part with respect to engagement team discussions. Then next is delegation of the work. So once they understand the entity, the internal control structure, get an assessment of the risk, potential for material misstatement, what are the different risk responses, they can actually delegate the work within themselves. So say who has to do what. So most of the main areas of risk assessment, they can actually delegate to experienced members how they are handling that. With the past experience or the judgment, they can actually do a better job in that. So all these, the delegation of work, etc., also takes place during this engagement team discussion. And overall, what happens is mainly to decide on the nature and timing and extent of the audit procedure. So once they get an understanding of the entity, its environment, its internal control, you get a assess the risk of material misstatement. You can actually divide the work, split the work among the engagement team members. How it is split is with respect to the experience of each person. You can delegate the work, and also what type of audit procedures you need to apply. So how long you have to apply, what extent you have to do the audit, all these things will be discussed in your engagement team discussion. This comes in your planning phase. Okay, planning phase of the audit. Before the start, all these things should be taken care of. So this is one important aspects of your bank audit, your engagement team discussion. They'll have a schedule. So before you go for a bank audit, you have the schedule, or maybe you have the schedule of what are the aspects which need to be looked into. Say if it is a concurrent audit or statutory audit, what aspects you should look. You are checking the count, you're checking the gold, you're checking the total cash available, checking the stock statements, KYC norms, all these things you have a schedule. Depending on that, you will start with your bank audit. Now, once these engagement team discussions are over, we'll actually come to the next part of your audit, that is what is the income recognition policy, what is the form content of the accounts, what type of financial statements need to be submitted by the bank, all the aspects. Now, the last aspect for this particular session would be your income recognition policy. Income recognition policy means what? We'll just finish with the form and content of FS also. So we'll finish with the part with this with respect to preparation of financials. Then we'll go to the auditor's perspective, like what are the who does the appointment of the auditor and all. Now, with respect to your income recognition policy, as far as the banks are concerned, income, especially with respect to non-performing assets. Non-performing assets are those assets which does not give a return to the bank as it should be. So it does not give any income, does not earn any income for the bank. So these kind of assets are classified as non-performing assets. We'll come to the norms and asset classification part. We'll actually deal in detail with respect to non-performing assets. So for the time being, those assets which does not generate any income for the bank, I can classify or I can tell as non-performing assets. They are not performing. I'm not getting any kind of revenue from them. So these assets, non-performing assets, normally in our regular or method of accounting, we can do it as a part of our accrual basis. We actually put the entries. Now, for banks, with respect to non-performing assets which is not generating any income for the time being, for these assets, I should not account on accrual basis. I should book the income only as and when it is received, when it is actually received. So because there is no clarity whether I will get income from these assets, or sometimes I may not also get. It might be a bad debt, it might be a loan which I cannot recover. So for those kind of non-performing assets, or maybe you have different classifications like doubtful assets, you have your uh, assets which are more than, like a recovery period is more than 2 years. Depending on that, you have different classifications of asset. So depending on that, your non-performing asset, it should be recognized only when you actually receive the income. It is not booked as an income on accrual basis, only on receipt basis. Say you have your loss assets, doubtful assets, your substandard assets. These are different classifications of asset depending on what time the repayment happens. Now, NPA, as of now, there is no generation of income for the bank. Such kind of assets only on accrual basis you need to recognize. I mean, only on receipt basis you need to recognize. It is not recognized on accrual basis because there is no clarity, no surety for the bank when they will generate income or when revenue is obtained from these assets. So only on receipt basis income is booked. Now, normally the policy for income recognition of the bank should be on the basis of recovery. It is on the basis of recovery, on the basis of repayment, how much amount it is actually receiving, rather than with respect to other subjective consideration, basically accrual or interest accrual. No, it is based on the record of recovery. Only when it is received, your income will be recognized. So this is one basic concept, very important concept with related to bank. So how your income should be accounted for. Now, coming to the next point, that is your form and content of the FS. So what are the form and content of your financial statements? So what are the financial statements the banking company has to prepare? So basically there are your balance sheet, profit and loss account. So here the regulator is your RBI, and it is as per your Banking Regulations Act. So your Companies Act or CARO doesn't apply here. So what happens, but there are, like, it is subjected to Companies Act. It's a banking company, it is subjected to Companies Act, but only with reference to all the norms, your reporting structure, your norms, your income recognition, everything will be with relation to your Banking Regulation Act. But say for example, your general AGM, annual general meetings, your dividend, all this will be with respect to your Companies Act. So Companies Act is also applicable, but only with respect to, or how much ever it comes as a part of your banking regulations within the prospective or within the aspect of this particular Banking Regulation Act, it has to stick on to. So your financial statements will be prepared as per your Banking Regulations Act 1949, your P&L as well as balance sheet, and the forms will be given in Form A and Form B respectively. So it is not as per your Companies Act, not as per your third schedule. So this is a totally different format. The framework, applicable financial reporting framework, is different here. Now, however, but other disclosure requirements with respect to, like, your accounting standards, these are all you have to comply. The banks have to comply with the Section 133 or as the accounting standards that is issued by ICA. So apart from this, the accounting standards and disclosure requirements has to be complied by the bank, other than your balance sheet and the P&L, whichever is as per Form A and Form B respectively. Along with that, they have also to comply with the disclosure requirements. That will be as per your Companies Act and accounting standards issued by ICA. So this is a form and content of FS. Now, coming to the audit of accounts part. So actually, I think we'll stop with this particular slide, form and content of FS. In the next session, we can continue with the audit of accounts with all the points relating to appointment of auditor, remuneration of auditor, and also what about the auditor's report. What is the format of report, or what is a long form report, and few other concepts. So we'll stop with this. So basically, in this particular session, we covered we saw the introduction of bank. What is the bank? What are the main functions of the bank? So apart from the other services that is provided, acceptance of deposits and granting advances. Now, different types of banks we saw depending on the areas or the sectors which they cater to, about the regulations they comply with. We saw commercial banks. They are broadly divided into private sector and public sector. Private sector, you have scheduled, unscheduled and foreign banks. Public sector, you have your SBI and other nationalized banks. Regional banks, we saw those related to the agricultural sector. Cooperative banks, we saw those working for the benefit of its members. And payment banks, banks which are accepting deposits up to 1 lakh but not loans. Developmental banks, those which are associated with your industries and banking, are also called as your term lending institutions. Small finance banks, again, they accept the deposits and also give small loans to banking units and industries. So this is again a quick revision. And then RBI, we saw the regulator. What are the functions of RBI? So any bank which has to start its banking operation, they has to obtain a certificate from RBI. So RBI, without getting a license, they cannot commence the business of banking. Now, with respect to functions, we saw regulation and issuance of currency, acting as a banker to both state and central governments and also to other commercial banks. Now, regulating the activities, day-to-day activities and operations of a banks, other commercial banks, inspecting the bank. So, they are actually acting as a regulator. So, we saw who is a regulator, what are the functions. Then we saw about where banking operations actually takes place. So, main operations takes place at the branches, whereas your policies, your procedures, administrative functions, internal controls, monitoring, delegation of authorities, all these are laid down at the administrative offices. Then we saw the features. So what are the features? Huge volumes of transaction, complex transaction. They also deal with complex or huge amount of monetary items, negotiable instruments. Then it is geographically spread through and works through different kinds of, different branches all across the nation. Then you have large, wide arena of products and services that is being provided. We discuss like what are the services, other services that is provided by the bank apart from the loans as well as deposits. We saw a number of other products and services like insurance. We saw your risk management. We saw letter of credits, guarantees, different other services that is offered by bank. Then extensive use of technology. So here we saw core banking. So how core banking has changed the whole outlook of the branches, how real-time updation occurs. So one particular deposits or withdrawal, how it is instantly communicated to different branches, how it is intimated to you at the moment you get a message. So what is the total bank balance all in your account. So this is again extensive use of technology. Then we saw how there is a strict vigilance or inspection by the regulator, that is RBI. Okay, so we'll see, then we saw the reports, the banking operation. When we saw what are the different features, we saw the types of reports, your long form audit report, you have your tax audit report and the statutory reports. Then we saw the bank audit approach and also we saw the importance of engagement discussions. We saw the income recognition policy. Then we saw the form and content of the FS. So how, as per your Banking Regulations Act, what is the form and content of FS? And engagement team discussions, we saw what are the different points to be included. So it is actually done in the planning phase of the audit, nature, timing and extent of the audit procedures, and especially to gain an understanding of the bank, its internal control, risk assessment. So all these delegation of work, all these things will be done during your engagement team discussion. Then basic audit approach we saw. Then also we saw the different types of other reports. In addition to the basic 3 reports, we saw other reports which are with respect to your treasury operations, SLR requirements, internal control, income recognition. Then we saw with respect to your adverse credit deposit ratio, any irregularity in the working of the bank or compliance. So all these things we saw. In the next session, actually, we'll start with the audit of accounts.